When Robinhood releases its quarterly earnings, it's not just Wall Street that pays attention. Millions of everyday investors do too. The company's results have become a pulse check for a new generation of traders, many of whom got their start on Robinhood's easy-to-use platform. Whether you're a seasoned investor or just starting out, these reports can have a direct impact on your confidence and strategy. The latest report for Q4 2025 rattled the market, sending Robinhood's stock price down, even as company leaders touted record achievements. Investors and analysts alike were left scrambling to interpret what the numbers really meant for the company's future. Why the disconnect? Because understanding these reports is key for anyone who wants to be a smarter investor. It's not just about the headlines, it's about digging into the details to see the bigger picture. Robinhood's journey mirrors the rise of modern retail investing, making its performance a barometer for Main Street participation. The company's ups and downs often reflect broader trends in how regular people are engaging with the stock market. When Robinhood stumbles, it raises questions about the sustainability of retail investing's momentum. It can shake the confidence of those who are new to investing, and even influence how other platforms are perceived. On February 11, 2026, Robinhood announced strong results in some areas but missed a crucial revenue target, triggering a classic Wall Street reaction. The market's response was swift, highlighting just how much expectations matter. It's like a straight A student bringing home an A-. Still good, but not what was expected. Investors often react emotionally to even small misses, which can create big swings in stock prices. We'll break down what Robinhood did right, where it missed, and what it means for your own investing decisions. Understanding these nuances can help you make more informed choices, no matter which stocks you follow. By unpacking this report, you'll learn how to look past headlines and make sense of any company's financial story. Let's dive in and see what lessons Robinhood's latest earnings can teach us all. Let's dive into the numbers that matter most for Robinhood's latest quarter and see what they reveal about the company's direction and health. Robinhood reported $1.28 billion in revenue for Q4 2025, just shy of the $1.34 billion analysts expected, a revenue miss that disappointed the market and led to some tough questions about growth. But profits told a different story. Earnings per share hit 66 cents, beating the 60-cent forecast. This surprise profit beat showed that Robinhood could deliver value even when top-line numbers fell short. This shows Robinhood managed its costs well, keeping expenses in check and improving efficiency, even with slightly lower sales than expected. Total platform assets soared to $324 billion, up 68% year-over-year, a sign of growing customer trust and engagement, as more people choose Robinhood to manage their investments. More users are treating Robinhood as their main financial hub, relying on its platform for everything from trading to saving and managing their money. Gold, Robinhood's premium subscription, grew to 4.2 million users, boosting stable, recurring revenue and helping the company diversify its income streams. Subscription income is less volatile than trading revenue, making it a key pillar for future growth and providing a cushion during market swings. These numbers show Robinhood is building a more resilient business model, focused on long-term stability and sustainable growth. But the revenue miss still loomed large in investors' minds, reminding everyone that expectations and market reactions can shift quickly. If profits and assets were up, why did Robinhood's stock drop over 6%? For growth stocks like Robinhood, investors care most about future potential, and revenue is their crystal ball. Missing revenue targets, even by a little, shakes confidence in the company's growth story. It's like falling behind on a road trip. You're still moving, but now there's doubt about reaching your destination on time. Robinhood also forecasted an 18% rise in operating expenses for 2026, signaling higher spending ahead. While investing in growth is smart long-term, it can squeeze profits in the short run. The combination of slower revenue growth and higher spending made investors nervous about near-term profitability. The market is always looking forward, and this report dimmed Robinhood's outlook just enough to trigger a sell-off. In the end, The future, not the past, drives stock prices. Beneath the negative headlines, Robinhood's report had plenty of bright spots that deserve a closer look. Platform assets surged 68% to $324 billion, fueled by a record $68 billion in net deposits, a clear sign of user trust and growing engagement on the platform. Net interest revenue jumped 39% to $411 million, providing a stable income stream less tied to market swings and more to the company's expanding customer base. This recurring revenue is like a financial safety net for the company, helping Robinhood weather unpredictable market conditions. Trading activity remained strong. Options revenue rose 41%, and equities trading soared 54%, showing that users are still highly active and engaged. Robinhood's core business is still thriving, even as it diversifies into new areas and adapts to changing market demands. The company also bought back $100 million of its own stock, signaling management's confidence in the business and its future prospects. Stock buybacks reduce the number of shares, making each one more valuable for existing shareholders, and often boosting investor sentiment. For investors, these moves show Robinhood is focused on long-term growth and shareholder value, not just short-term gains. The foundation is getting stronger, even if the market reaction was mixed in the short term. Sometimes the real story is in the details, not the headlines. Looking deeper reveals a company building for the future. Not everything in the report was rosy. Operating expenses jumped 38% to $633 million, driven by heavy marketing and the integration of acquisitions like Bitstamp. Investors worry when costs rise faster than revenue. It puts pressure on profits. Robinhood expects expenses to climb another 18% in 2026, funding international expansion and new ventures like Rothera. These bets could pay off, but they come with risk and upfront costs. The company's reliance on trading revenue, especially from options and equities, makes it vulnerable to market slowdowns. Crypto revenue slumped, highlighting how quickly hot segments can cool. Robinhood is working to diversify income, but volatility remains a challenge. For now, unpredictable trading trends make future earnings harder to forecast. Robinhood's crypto business was a weak spot in 2025. Crypto trading revenue fell 38% to $221 million, a sharp contrast to gains in stocks and options. The crypto boom once fueled Robinhood's growth, but its volatility is now a liability. Crypto markets are unpredictable, booming one year, slumping the next. Robinhood's acquisition of Bitstamp aims to strengthen its crypto position and expand internationally. It's a long-term bet that crypto will mature and stabilize. For investors, this is a lesson in diversification. Don't rely too heavily on one volatile revenue stream. Building multiple income sources is key for both companies and individual investors. Robinhood isn't just reacting to challenges, it's reinventing itself. CEO Vlad Tenev's vision: turn Robinhood into a financial super app, where users can invest, save, spend, borrow, and plan for retirement, all in one place. This strategy explains the company's aggressive spending and expansion. New products like IRAs, credit cards, and enhanced gold features are already rolling out. International expansion, starting with crypto in the UK and Europe, is underway. The 18% rise in projected expenses will fund this transformation. Analysts see Robinhood's rapid product launches as a sign of future growth potential. The super app vision could boost customer loyalty and lifetime value. The risk? Execution. Robinhood must deliver on its promises and manage costs. If successful, this bold strategy could redefine the company and the industry. What can everyday investors learn from Robinhood's report? First, look beyond the headlines. The stock drop was about missed revenue, but the full story was more complex. Always dig deeper. Don't let one negative data point shape your entire view. Second, know the difference between past performance and future potential. The market cares most about what's next. Third, diversification matters. Robinhood's crypto struggles show the danger of relying on one income source. The company's strength is building multiple revenue streams, just like your portfolio should. Finally, separate short-term noise from long-term signals. Daily price swings are just that, noise. Focus on trends, customer trust, product launches, and strategic execution. These are the signals that matter for long-term investing success. Stay curious, stay critical, and keep learning. Now, turn the analysis inward. Review your own financial health. Apply the same principles. Track your income, manage expenses, and plan for growth. Set clear financial goals and make sure your actions align with them. Diversify your income and investments, just as Robinhood is trying to do. Even a simple written plan can guide your financial decisions. Take one small step today. Read, listen, or track your spending. Investing in your financial knowledge is the best investment you'll ever make. Start now and let your future self thank you.